Joining me now is Hank Smith. He's the Director and Head of Investment Strategy at Haverford Trust. Welcome to the show.
Oh, it's great to be with you this morning. Thank you.
So what storylines are you tracking most closely as trading gets underway?
Well, look, I think the biggest issue that's facing the economy certainly is tariffs, and specifically the uncertainty around tariffs. We have some powerful tailwinds going on right now: deregulation, the passing of the big, beautiful bill, and Fed easing. The only missing ingredient in this economic story, tariff uncertainty, which we're expecting by year end going into 26, we'll have much a clearer view of the tariffs. We won't have these weekly changes, almost daily changes. And when we get there, we think that kind of certainty is going to help propel a more powerful economy in 2026.
Hank, the Fed cut interest rates and, investors are pricing in another rate cut in December. I think 2/3 of investors. What is your take on what will happen for the rest of the year into 2026 with the Fed?
Yeah, we're 50-50 as to a December rate cut. If we're right about this scenario of an accelerating GDP in 2026, we might not have any rate cuts in 26, but certainly no more than one or two. It really, the deregulation, the tax incentives in the big, beautiful bill, along with the tax certainty around the federal tax code, are very powerful tailwinds for economic growth. All we need now is that tariff certainty. Let's get tariffs off the front page. Let's find out whatever the playing field is, and corporate America can continue planning and spending.
And in addition to the Fed tariffs, we are in the heart of earnings season with retailers and tech giants NVIDIA set to report their figures in the coming weeks. What are your takeaways from earnings season thus far?
I think it's been a overall pretty strong earnings season. Look, corporate America is in great shape. Margins are high. Balance sheets are exceptionally strong. And so I don't think that's going to change in 2026. I think you're going to continue to have a double-digit earnings growth, at least S&P 500 double-digit earnings growth. Sure, it's powered in large part by kind of the top 10, the big tech names. But there's also accelerating earnings in the other 490 S&P 500 earnings. So I think this is a very good environment for equity investors.
And I understand, Hank, that you believe tailwinds are in place for economic growth in 2026. Can you elaborate on this?
Well, look, this has been the most underestimated economy over the past several years. I mean, you go back 18 months ago, the majority of economists were expecting a recession. It's been incredibly resilient how the consumer has behaved over the past several years and continues to behave. And look, our economy is 70% driven by consumer spending and services, and the consumer has just been a juggernaut on top. Been a juggernaut recently, really over the past handful of years. Layer on top of that the AI spending, and this is not just on chips, but everything: data centers, energy build out. That is adding to economic growth. And we believe this is a secular story. We're in the very early innings of this AI story, and it's going to continue for many years to come.
Thank you, Hank Smith, Director and Head of Investment Strategy at Haverford Trust.
Have a great day.